Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for what is going to be another jam-packed daily cryptocurrency market update. And if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that is exactly what we're going to be doing in this video. It's been rather lackluster in regards to the news over the past 48 hours, but we do have some news emerging in regards to the whole FTX fiasco and actually how FTX is looking to actually repay their customers in full. And that's where we're going to start the video off. We're then going to be diving over to a tweet from Robert Kiyosaki, who is a forever impending doomsday individual. That's a lot of what he talks about, is the impending collapse of the fiat systems and why you should be bullish on the likes of gold, silver, and now, of course, Bitcoin. We're going to be looking at that tweet. I think Robert Kiyosaki, and I've got many books of his behind me, I think he's very right, but the timing is very wrong. You know, he's been talking about this stuff for 40 years, but I think the gold and silver bugs will be right one day, just like the XRP bugs will be right one day. And ultimately, we are heading towards entire monetary reform. And we've spoken about the kind of miracle-esque nature of Bitcoin and how it kind of seems a little bit too good to be true. And we actually looked at comparables between how the Federal Reserve came into existence, first of all, with the 1907 panic that was engineered by the international banking cartel. And then, of course, they met at Jekyll Island. They tried to put forward the Aldrich bill. They realized that they weren't going to get that through because of its Wall Street involvement. And then they basically just snuck it through the back door in regards to the Federal Reserve Act in the name of taking power away from Wall Street and giving it back to the masses. We're now at a kind of similar point where we're trying to take power away from the corrupt central banking cartel and give it into the masses in the form of Bitcoin. But who's behind Bitcoin is anybody's guess. I just wanted to sort of talk about that a little bit. Then we're going to be diving over to the charts. Of course, Bitcoin is very much following the plan that we've set out for it. We think you're going to end up with 150k Bitcoin. This is in line with our macro overview. And actually next week is going to be very key for the kind of macroeconomic environment in regards to inflation. And there's a wide range of inflation guesses. My guess is it's going to come out lower than the previous one. The previous one was actually revised to 3.7. I think we got a 3.4 print or 3.3 print. I think you might even be looking at a sub 3 print. And of course, things like true inflation and others are potentially hinting at this. So we have a lot to get into, as always. And we spent nearly 3 minutes talking about what we're going to get into. Let's now get into it all. And let's start things off with, of course, the news in regards to FTX. So as Sam Bankman-Fried awaits prison sentence, FTX customers await a surprise, a full repayment. Now, I actually think Sam Bankman-Fried is going to avoid prison because of the likes of who he was rubbing shoulders with. He was on stage with you know who. I'm not going to mention any names and go down that rabbit hole, but I can't help but feel that Sam Bankman-Fried and FTX was a Trojan horse. It was a totally set up thing. And it was a set-up thing to perhaps get cheap crypto for institutions. It's very coincidental that they all decided they were going to launch an ETF around or after this, just when everything had capitulated as a result of this. And I'm sure they were buying up those dips just like we were. And that's why we're a technical analyzer, because the charts are the footprints in the sand, guys. There's no doubt about it. If you don't believe in technical analysis, you've not been following this channel, and you're following the wrong people that don't know how to do it properly. And actually the classical, like you can see behind me, technical analysis is what I think works. I think all this kind of new age, it's like all things new age, people put their own spin on it and try and sell signals and all this nonsense. But moving away from that, let's cover what this is talking about. So with Sam Bankman-Fried preparing to face sentencing next month, and a potential life behind bars, FTX customers are looking at the possibility of recouping their money. Bankruptcy lawyers for the FTX estate said last week they expect to pay back all customers. The optimism stems largely from the rebound of the crypto market and appreciating value of the FTX's venture investments. So actually they could pull this back. I think this would be a huge story. And actually I would love for this to be the case. For all the individuals that lost money, including good friends of mine, lost nearly. I have a friend that lost $1 million in FTX. I have multiple friends that lost 6 digits in FTX, and I'd love for them to get their money back. And you guys, of course, that were victims to it. I don't think this is going to have any bearing on the price. I think most people are going to end up hodling their crypto that they get back because, of course, of the nature of the market that we're in. But lawyers representing the FTX bankruptcy estate told a judge in Delaware last week that they expect to fully repay customers and creditors with legitimate claims. So what that means is always some sort of legal jargon that perhaps tells a different story to what the headlines do. Bankruptcy attorney Andrew Chidrich, who works with FTX's new leadership team, said there is still a great amount of work and risk ahead in getting all the money back to the clients, but that the team has a strategy to achieve this. It's welcome deployment for the many thousands of customers, reportedly up to 1 million, who collectively lost billions of dollars in FTX's collapse 15 months ago. Doesn't time fly? It's been 15 months. Seems like yesterday. When the crypto exchange spiraled into bankruptcy in a matter of days, given the lightly regulated and unsecured nature of FTX and the crypto industry at large, whose clients faced the real possibilities that the vast majority of their money had evaporated. Plenty of failed hedge funds and lenders lost virtually everything during the 2022 crypto winter. So I think this is all gonna be perhaps a reason why I don't think Sam Bankman-Fried will go to jail, because they'll basically say, look, we paid all the funds back. So what has he really done? And there was absolute mischief in regards to FTX. I don't want to go into all that. Let's look very quickly at a tweet from Robert Kiyosaki, the ever-impending doomsday. It's like the people who used to tell me, next month revelations happen, the month after that it's going to happen. Timing of things such as that. That's an example of perhaps the tune that Robert Kiyosaki's been singing. But end of the American empire. This week, America will bet $68 billion on a game. At the same time, America's debt is the highest in world history. A debt America can never pay back. The Roman Empire ended in the same way, with massive gladiators entertaining chubby Romans while their bankers debased their currency to pay soldiers and bills. History repeats because stupidity repeats. Don't be stupid. Bet instead on gold, silver, and Bitcoin. And I largely agree with his sentiment. I just think that he's been talking about this for a hell of a long time. He will eventually be very right, I do believe. And that's where we think things are heading. You're going to have entire monetary reform. You're going to see a mass devaluation of the US dollar, but first you'll see other currencies do that. This is the dollar milkshake theory, something that we're a fan of. And the likes of things with perhaps real value, whatever you want to describe real value as, and there's many ways to do it, will shine through. These things are pegged to the US dollar. But the thing with this is, let's say silver goes to $300 an ounce, and I've seen predictions of that. Those dollars aren't really worth anything, and actually, what's the relative buying power of that silver in that new environment? These are things you've got to think about, I think. Let's dive over to the charts now and just give a quick overview, because we've had quite a few technical updates recently, and this is the plan. It's playing out beautifully. The weekly candle that we've got is a strong one. It's showing you the cojones behind this move. And this is what we're expecting. Ultimately, this is going to be, if we do get the play out of this inverse head and shoulders pattern in the same way we did here, on a similar candle, and remember, you've got lots of liquidations to come at that 50K mark, you're going to be very much set in motion to go to 150K. And actually, altcoins are doing unbelievably spectacularly. Chainlink, we're looking at the exact same thing. You can see how this is progressing. Chainlink's an altcoin that's done nearly 300% for us thus far and made me a lot of money in the past year. You guys can mirror and copy what I'm doing. Just get on board with the Patreon. And of course, we do talk about a lot of things on YouTube because we love you guys. I want to talk about something else, which is Google Trends. So Google Trends, we haven't seen anything yet, guys, in regards to this market and where it's going. We haven't seen the FOMO. We haven't seen anything. And actually the charts are kind of relatable to that in regards to a lot of altcoins are just basing. Some of them are broken out into stage 2, or what we define as stage 2. We need to see the further continuation of that. And actually, this is going to come back with interest. Retail isn't here yet, largely. It's largely institutional. And we can see that in regards to inflows and outflows. Let's talk about the week ahead. It's going to be a very interesting week. We know that Bitcoin's, and I'll go back to the Bitcoin chart actually here, guys. This wasn't just, so this key technical level that we expected to act as resistance occurred and was signaled, and then you had all the fundamental news that accompanies it. And this is always the way with technical analysis. It's the crystal ball. It's the footprints in the sand. Doesn't mean that you're going to be right on everything 100%, but it's going to give you an advantage over the rest. This sort of running into what we wanted to be a neckline, and this right shoulder may have played out. We did say it was going to be a shallower one. All coincided with macro headwinds, dollar strong on higher inflation than expected. We're now seeing a little bit lower and easing on that inflation. And of course, the buy the rumor, sell the news event with BlackRock's ETF. Okay. The interesting thing with what we're going into next week is we now have CPI for the United States. And their forecast for this is a 3.7 year over year and 0.3 month over month. And this is down from 3.9, which was the revised one. Remember, the actual print came out at 3.4. The forecast here are 3.1. I think you may get a sub 2, and I think the markets will really enjoy that. And it will kind of put a little bit of weakening into the dollar. Although the dollar, and certainly the Dixie, has the likes of UK GDPs, UK CPIs to contend with. That we need to see that. We need to continue to see dollar roll, and we need to see, and I'll show you this very quickly, our broader plan on the dollar play out. So our target for the dollar on the short term got hit, just like our target for Bitcoin on the short term got hit. We've covered that in yesterday and the day before's video. This is where we think the dollar's coming to the lower band of this trend, only for it to pick up and then you to get a bit of the dollar milkshake thing and whatever else plays out. And this is a trend that you've been in since 2008 till when we officially entered this kind of communistic monetary regime. And it is communistic, guys. There's no doubts about that. So with CPI, the prior one was revised to 3.9. They have it at 3.4 still here. We're looking at 3.3. This is saying 3.7. I think this is going to shock. I also think UK GDP is going to come out just like we expected for European, better than expected. Probably flat at 0.0 or even plus 0.1. It's going to be a big week. We'll keep you up to date on it all, of course, on this channel. But I think you're going to get a lower than expected CPI print. I think, and I'm going to pull this up very quickly for you, although I didn't prepare it for this daily market update. If we look at something like true inflation, and if you guys are not following me on Twitter, what are you doing? Head over to @RealAllinCrypto, and that's my Twitter account. You can see the amount of followers we've got. There's lots of scammers out there. But you can see true inflation's looking at 1.36 for inflation. And I actually think Jerome Powell hasn't done a bad job of killing inflation and keeping the economy rather strong if you trust the statistics that they give you. And certainly the markets have benefited as a result of this, as expected. Guys, that's really all I've got for you in this update. Quite a comprehensive one. Lots to cover. Lots of things that we have covered. Going to be interesting to see how the FTX debacle plays out. Robert Kiyosaki will be right eventually, but very wrong on the timing, as he's been thus far. It's going to be an interesting week. We've got lots of data. Remember, there's no real interest in crypto whatsoever. That is all still to come. And you guys are lucky enough to be investors in this space pre the kind of FOMO and all the ETFs and things like that. And yeah, busy week ahead of us. So that's all I've got for you guys. Thanks a lot for watching. I'll see you all in the next one.